Hi Nick, you're in the recording now. I'll say hello to you later on. Good afternoon, everybody, and welcome to today's edition of Live Market Analysis, ASX style. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets Australia, and it's a pleasure to be with you as we delve into the depths of your portfolio. We're going to kick out the ones that aren't so good, keep the ones that are great, and add a whole bunch of amazing stocks in next to no time at all. Just a little bit of housekeeping. It's pretty simple though. It's over to you. Let's get your portfolio questions answered. Get onto your chat window there, whether it's your live in session with me here on the Zoom because you're registered, or you're streaming on YouTube, LinkedIn, Facebook, or Twitter. There's got to be a little input somewhere. You type it in, the stock you're interested in, and I'll get onto it too sweet with a technical and fundamental reader. I do like to start with my charts. It's my favorite place to be. We're not going to talk too much about the macro today because we do that on Thursdays. Join me on Thursdays. But I did notice one little thing last night. I'm going to zoom in on the NASDAQ Composite, and my short-term trend has turned green again. So that's something to cheer. Overall, markets looking just so close on the cusp of potentially making another leg higher. That would be wonderful for us shareholders. Nick is online as well. First request coming in on CSR from William. And let's head over here. CSR. What I'll do is we'll do the chart here, and then we'll head over to the spreadsheet to the company valuation. You can see I've drawn this in the past. I'm going to not extend that. I'll extend it across because it'll show us that we've actually done something really important on CSR in the last few days. So this old point of supply, point of demand, what do you reckon? Is it a place where the market bounced from the past, or the market fell from the past? So that is a point of supply over here. And what we tend to find is that past points of supply, in theory, should act as future points of supply. So this one here, and that low there is if you see it up here, 531. Okay, 531. 531, that's the key number. And then we get to over here, and we can see that it didn't act as supply. So here's the thing. We think with any point of supply, we think it will be a pause, right? And we won't know till we get there. And look at this, we just cut straight through that hot knife through butter sort of stuff. So clearly it wasn't a POS, okay? How do you know if it's a POS? Well, you're going to get white candles. You're going to get our demand side buddies in there. I'll draw them early in the session, so I only need to draw them once. That's one of them, and that's going to have a little lower shadow like this. And we're going to change the body so that it's white. And then you know what I do next. I go copy, paste, and we show the best buddy of that candle, which is that one there. So if we see these demand side buddies, we call them our demand buddies, okay, at points of supply or expected points of supply, points of demand, we think it will be a point of demand. Let me change that. So the old points of, I always get mixed up with my points of supply and points of demand, don't I? So the old point of supply, we think it should act as, oh gosh, I wish I could rewind this. Just testing. It's a point of demand, obviously. Boy, do I get mixed up. Here we go. So there's our point of demand. How do we know it's a point of demand? We rallied off that point in the past. We think it will act as a point of demand in the future. Is it demand? Well, not this time. Why? Because we got the opposite of our demand buddies. We've got our big supply buddy in here. So supply buddy is easy to do. One looks like this, filled in black, and the other one looks like this, and it's going to have a shadow pointing up like that. All right, so these are our supply side buddies, and I'm going to get to the point very, very quickly because it's something important we need to know. Supply buddies, we think it's going to be a point of demand. We don't know until we get there and see the candles that manifest themselves there. See the candles that manifest either the demand or lack thereof. That was a lack thereof, okay? Now, the problem for this area in the future, that previous point of demand, it and this is the point, it probably will act as a point of supply in the future. Oh, Carl got to the point. Finally, thanks, Carl. Because here it is acting as a really significant point of supply. Okay. Now, points of supply, we need to work through them. We don't often get through them all straight away. So when you think about how much supply is up at that level when we get there, all the people who were hoping to get back up to this point, after it got down here, obviously it's in a lot of trouble, people wishing they'd got out. Finally, it gets back up there. They take that opportunity to sell some. Okay, we hit that level, we've got some demand in the system, we take some out. Okay, and the next time we get there, there should be a little bit less and a little bit less and a little bit less. Okay, until we've gotten rid of that point of supply and we're actually able to break through. Okay, so I think this one is looking very good in that we have tested, we have dealt with, we have overcome. Okay, the point of supply, the excess supply at that level. All good news there. I like let's have a look at trends. Short-term trend is up, so that's good. And the long-term trend is about to turn. I'm happy with that. Okay, I don't mind buying long-term trends that aren't strictly up just yet, as long as the short-term trend, the price action, the candles are all doing the right thing. Let's talk about the price action. Okay, that is one of these three. It doesn't really matter which. We would obviously pick the lower if there was a low one, but I don't think there is. And then we come in here. And notice the price action is good. And what is good price action? Well, this is good price action, right? Where the second from last pod is at or above the, let me fix that, the last pod is at or above the second from last point of supply. Okay, there we go. So that's good price action. And in fact, we're going to call this great price action. And we see that it stops being great price action just in here now. Many of you people have been suffering through these sessions for many months now, some of you many years. And you're looking at that and you go, okay, Carl, I know exactly why that price action compressed. You've taught me this, and I'm okay with that. If I'm looking at this as a potential trade for myself, I'm not going to get too fussed about the compression of price action here. I know what good price action is. You tell me every session, Carl, it's finally sunk in. But I'm not going to fuss over the fact that it wasn't great here because we had a little bit of an overlap, didn't we? Because I know, Carl, that when we approach those points of supply, we often get the price action compressing. So that's okay as long as everything else is good, and it is good. Anyway, I like the candles. This candle in here is particularly very good. Today's candle is not that exciting, but not terrible either. I think it's just consolidating this break. Buy, hold, or sell is where we need to get to next because we've done everything. We've talked about long-term points of demand, points of supply. We've talked about supply removal. We've talked about trend following. We've talked about price action. We've talked about candles. I mean, we've done everything here. Now we're ready to make a decision. Okay, well, where's the next point of supply? For me, that's up here. It's probably a band. I don't think it's a single point. And looking, why would I draw that? And you're going to want to draw these yourself, aren't you? And I want you to get good at drawing these. Why did I start there? And why did I finish here for my rectangle? Can you get a rectangle on the chart? Of course you can get a rectangle on the chart. You can draw these rectangles. Hey, go out there and draw rectangles. And you can see why I've drawn the rectangle that big. So I don't think it's very rarely, I know that's a POS, right? That's a POS up here, but it's very rarely a single point. You know, we've got an area, a zone, what's another word there? You know, of supply where supply is going to be motivated. So have we got enough room to make a trade? I think we do. So I could happily go 1/3 here, I think is the end of this analysis plus 1/3. No troubles. I'm going to dip a toe in the water. Am I going to go whole hog on this? No, there's probably a little bit of supply in and around here that maybe I just want to, you know, just see how we go. Get in a bit and see how we go. I could have probably got in a little bit earlier on. Maybe this white candle here was pretty good, just underneath the point of supply. But you know what? This is as close to the first place you're going to do it as any. Okay, next place that we go is to head over here. And what we're going to do is type in CSL into CSR, I should say CSR, into the Thomson Reuters Definitive Icon spreadsheet. It's sort of their spreadsheet plus a bit of my good stuff. So all of this stuff down here is mine. In fact, this is also mine as well. But what comes from Thomson Reuters? Okay, this bit comes from Thomson Reuters, consensus estimates. So they go out and they survey, well, whoever will give them estimates, but in this case, 12 big brokers and research houses, the smartiest of smarty pantsers out there researching companies, much smarter than us, I can assure you. Even if we put our collective wisdom together, we wouldn't be as smart as even one of them. Revenue, EBITDA, EBITs, all the letters of the alphabet there that you could possibly want. They average them out, and that's what gives you your consensus numbers. So when you hear in the media talk about consensus numbers, this is the consensus numbers here that they're talking about. And what I like to look at is obviously just historical as well, because that's in the bag. We want to see trends, and in terms of trends, I'll head down here to my earnings per share line. And typically what I want to see is a bit of a bottom left, top right sort of sense about it. We're not seeing that because we're seeing a dip here through 2020. What happened in 2020? We had a big pandemic, I don't know if you remember. And then it actually started to go pretty well. So I can probably forgive, in fact, interestingly, before the pandemic, they were having a bit of a tough time. That's interesting. It is a cyclical company, and you can see the cyclical nature. Maybe I should be in this slide here. EPS, well, EPS reported. I mean, that's when they take out all the one-offs and things like that. So let's go to EPS and 36.27. There you go. There's the dip. Looking forward, we've got a dip as well through sort of here before we get to growth. So we're seeing the lumpy nature of CSR's growth. And 4% compound annual growth rate over the next 3 years is what we got. You can see the lumpiness through the percentage changes there. Okay, I forgot to tell you about the target price here, 542, which allows 0.6% upside from the current price. That might be yesterday's close though. The average rating is a hold, 1 strong buy, 4 buy, 6 holds, 1 sell. A little bit polarizing, and that's probably why there. Not a lot of growth in the business. That's not the end of the world if we can get it cheap enough. Okay, now the average market growth is about 8%. The average market P is about 15. Okay, if we can get, oh look, that changed it because I changed, see that's March there, lining up with March. Okay, it's not a June 30 end. And in fact, when we do that, it makes all the right numbers. We're actually minus 3%. So we need to see this at a really big discount. It's not. It's trading around 12 times, and looking forward, because the earnings are going to fall, it's around about 13.8 times. You know, when I get here, I'm looking for a red flag, aren't I? 13.8 versus the 5-year range. It's within the 5-year range. That's not that great. I like to see it below the 5-year range. This could be a red flag. I mean, the valuation of CSR is not fantastic. I mean, the brokers are way higher than me though. Okay, so my valuation, which says, I don't like the growth and I don't like what I'm paying for that growth. I want to get growth at a reasonable price. That is the style of fundamental analysis. I do a valuation analysis. I do growth at a reasonable price. I'm not getting growth and it's not at a reasonable price. Hey, William, I don't know. Does that change your view of this? Should it? Don't forget, those broken numbers are not static. Those broken numbers are going to change as the earnings outlook changes, and maybe there's some upgrades coming in the system. I don't know, but do you look at that and still add the third? Hey, for me, I don't care what the fundamentals say. I'm going to just go on the charts. The chart says all. So what a fascinating case study to have up front, because we get to the chart, we go, that's a buy. We get to the fundamentals and go, that looks expensive. Okay, let us go to the next one here, which is for Daniel. I should make sure Nick is taken care of with all of his questions here. And it's about, I'm telling you, there's about 5 different places that I'm getting pinged with information at the moment. So let's go to this one here. Just put it in the chat, Nick. If you bought there on CSR, do you run a stop loss? If so, where would you place it? Stephen in the chat. Okay, so where would we put the stop loss? Okay, so where do stop losses go? We want to put them beneath points of demand. Okay, why? Why do you want to put your stop losses beneath the point of demand? What's a good analogy here? I mean, at the end of the day, we know that there's demand in the system here. That's a point of demand. It's a demand zone. It's a demand area. There was demand there. Okay. Does that mean there's going to be demand there in the future? Look, we don't know, but it tends to happen. We tend to find that points of demand tend to act as future points of demand. Okay. So if the price, now what does demand do to the price? Well, demand will tend to push price back up if there's more demand than supply. Okay, so if the price is possibly going to come into this area, I mean, there's a demand area and bounce off that area, then it would be sensible to put your stop loss on the other side of that area. So if you could imagine this as a bit of a sort of a demand barrier, right, as a protection, therefore, of a long side stop loss, okay, it would make sense to put our stop loss on the other side of that demand barrier. Okay, so let's say that low there is 516. Okay, so this is 5.16. And remember last week we talked about you can use the average true range over the last couple of weeks, so 10 periods. Some people use 14. That tends to be the default. Look, not even streaming. Just realized it's requiring me to do a login. Well, no streaming today. So 516 average true range. I don't have it on screen. I'm not going to get it. You can go figure out how to do that yourself. But I suggested to you at least 0.5% beneath that trough low as a bare minimum. So in this case, it's going to be about 3 cents. So you wouldn't put it above 5.13. Okay, as a stop loss. But a good, a good question there as well. Okay, let's head to Marco and have a look at RWC, which is one we've been following. We added a third. You can see this little red thing in here where if I go, there we go, now it's green. Maybe you can see that better. I like to think that's the perfect point to do it. That's a really nice candle bouncing off the demand point there. So if you did get in, that's good news. You can see all the scratchings we've done. I tell you about fantastic price action, which it had. A few black candles came in. We had a bit of a tough patch for the broader market though, but I think it held really well. That lower shadow, that candle there, it's all good. There's nothing bad in this one, nothing that makes me want to get out or not continue to add risk. If it was closer to the light green zone, I'd add some more risk. It's probably just a little bit too far away and therefore maybe slightly more prone to a mean reversion. Where could that mean reversion terminate? I would say watch this zone here. And if you did see something, I don't think it's going to get down there, to be honest, but just, see how those little candles just slowing down? So any little 2-3 candle pattern that just pulls back a little bit, right, and throws in your demand buddies. I've shown you what they were. So in this green zone here, you get those demand buddies, or even you could get a shadow even a little bit lower, but that's where you'd be looking to add your third on this one in line with your existing trade, but not right now. I just think we just hold. I think Marco is what you're after, because I'm guessing you're on it. You might have got in last time we looked at it. So happy holder there, and you will need to see this before you buy. And to get out, well, let's see what the candles look like up here. We can see that this is a really obvious, isn't it, point of supply that we're going to need to be careful with. Do you just get out as soon as it hits that level? Do you set an order now? I mean, you can do that in ThinkMarkets platform. You can put a take profit order at what's the low of that zone? It's about 460. Do we put a take profit order at 460? Look, I don't mind that. I don't mind it. If you're really brave, I don't know if that's the right word. If you're really brave, just wait to see what candles you get there. If you see the black candles, then you'd exit the third. If you're a bit nervous about it, then you just put the order up there right now and dust a third when you get there and take a nice little profit on a 30 position. Don't forget, if you take a third off the table, you're still going to have a wonderful 2/3 on what will be a wonderful uptrend by then. So pretty happy holder there. I'm not sure if we did this one last time, but let me check on it. Because I'm curious. RWC over here. Sometimes I try to go too fast because I know that we're going to have so many suggestions today. I want to get through them all, and that's why I do stumble and fumble. So apologies for that. But it's in the interest of trying to get everybody's questions answered. Okay, that's the first thing I did there, is set that to that. This is starting to look a little bit healthy. Straight away, we can see some positive earnings growth. We've got 17 broker estimates. It's more than we even had for CSR. They're roughly the same in terms of their positivity, aren't they? Pretty close to fair value from the brokers. The rating is a buy, though. pretty consistent here, 11 buys, 6 holds. No sells, no strong sells. That's good news. Now, what about the EPS line? Is it bottom left, top right? We had a dip during COVID. That's okay. I can certainly forgive it for stumbling a little bit during a global pandemic. But then the growth came back really well. We're actually probably going to have a little bit of a hangover year here, if anything, as we cycle that great growth, and maybe even into a second hangover year. But there is growth there, and then growth out to the next 3 years, and that's why we're getting that plus 7%. So look pretty close to the market growth. Are we getting it at cheaper than the market P? We actually are. So, market P is typically 15 for that sort of growth. 14 is fine. And that's why this my spreadsheet's a little bit more forgiving on this one than it was for CSR. And I'm saying, look, hey, my price target, and it's pure coincidence that my price target's exactly the same as the brokers there. So here we go. We've got 17 of the smartest groups, and not just one person covering Reliance at Goldman Sachs. There's probably 2 or 3 analysts working on it. 17 of the smartest groups of analysts in Australia, and my spreadsheet does everything they just did. Now, is that 14 reasonable? Yeah, I wouldn't say it's a bargain. But it's not the wrong one either. It is at the bottom end of the 5-year range, so I think it's about right. I think that's a really sensible valuation for this. Maybe there's a touch more in it, but probably not a whole heap. But I can't see any red flags there, Marco, to suggest that you wouldn't run out and do what the chart says. Okay, so that's a nice little case study as well. If we're here, we've done CSR, done MMI is the next one here. Let's check that one out. And this is for Peter. And Metro Mining, not one I'm familiar with. Looks to be turning the corner though, Peter. So that's a good sign if you've got it. Certainly there's enough in there to hold on to it. I don't think I'm at a buy just yet. So things I like. Okay, short-term trend is up. That's good news. The price action. And you can see here, see how the candles are very different from anything we've seen? We've got sort of bullish candles or sketchy candles. Sometimes, let me just draw this in while I'm here, and then I'll come back and I'll show you something that's very important. So let me point out to you these, we can't even call them candles because are they really candles? There's just a line. So the open, the high, the low, and the close on those 2 trading sessions, 2 days in a row, it basically didn't move from where it opened. That's a little disturbing. It's telling you that there's not a lot of interest here. There's not a lot of liquidity out there. In fact, if we look at the volume on those days, it's I always get mixed up with this, but so what's it, about 180 or 18,000? It's hard to tell because you see the volume's got this 6th business going in. I don't know. Anyway, it's probably not very much. I can go hold. I'm not a buy. What could make this a buy? I don't know. This trend here would need to turn around. Or at least converge a little bit more. We need to put some white candles if you can even get white candles. Look, I don't want to spend too much more time on this. I could go hold on a buy. Will we get a valuation on this one? I can just to prove to you on this one, and that we don't need to look at any of these small ones here. It's not because I don't want to. It's just that we won't get them because there won't be a single broker out there covering it. Stand corrected. One broker. Average price target 6 cents, which is pretty good because it allows 250% upside. Now it's one broker, right? So you've got to imagine it's probably a smaller broker out there. It won't be Goldman Sachs or Citigroup. I can assure you, it might be. I don't want to label them, but like an Ord Minnett or somebody even smaller, just a boutique broking firm that knows the company. They've had visits and things like that, and maybe they even did the float. They probably even did the float or a capital raise, to be honest, and that's why they're covering it. So I have to be careful here. You might suspect that they're going to be a bit biased. So take all of this stuff with a pinch of salt. Is it making money? Well, they're actually suggesting it's going to make money from this year, which my mind is blown. I would not have picked that for that stock, that it's actually probably going to make money. And I'm checking for typos here, but I can't see them. So anyway, if you're trading on a PE of 1.1 earnings growth, so my model actually says that 6 cents is not unreasonable, all things considered. But I would be finding the salt and shaking it all over that one. Nick's saying, "Hey Carl, any chance you can talk us through picking up patterns on bear and bull traps from Steve?" I'm not sure if this is kind of the forum for that, Steve. And I'll try and mix in as much education as I can, but the goal of this is to really try and get people's portfolio questions answered. But I'll see if I can put that in, sort of sprinkle that into today. I think it'll be okay to do everybody's request today. Mineral Resources, Marco's second one. And we're okay. Sorry, I've got all sorts of things going on here. I was going to say we're okay. We're not okay. We're the opposite of okay. Yeah, this is not okay. You can see some of our scratchings from the past. It's very interesting, isn't it? We've had obviously minus 1/3. Look at this, minus 1/3, minus 1/3, minus 1/3. This plus 2/3 is just saying, well, if you got out 1/3 here, you'd have 2/3 left. That's all that's saying. It's not. I'm not there saying buy 2/3, even though I'd love to claim credit for it because it was the perfect place to buy. I was just saying if you got out there, you'd still have 2/3 left. But you can see here our change in trend signals are clear as day. And then even below here was the last 1/3. So I can't see any reason you'd still be holding Mineral Resources, Marco. There is a little plus 1/3 I can see here, but it's, correct me if I'm wrong, but we were talking about it on that candle there, bouncing off the long-term trend zone. And if it closed on the day above 82.52 and it closed at 82.11, we would add 1/3. So I don't even think we would have added 1/3 there. So there's really no reason for us to or for me to analyze this through the lens of we're in it and wondering what to do with it. There's no reason you should be in it. And there's certainly nothing since it broke through this minus 1/3, last 1/3 to get back in. Really all I can see is very clearly, I wonder if you can see it. What's the thing that strikes you about just what's on screen there? Okay, because at some stage it's got to be less about me talking and you thinking a little bit. And I think, let's go here. If this is the old point of demand, what are we starting to feel about what's happening now? I really feel that last point of demand, and it was reinforced here, it's an important one, is starting to act as a point of supply. And therefore, this is very dangerous here. It's a very slippery slope. The fact that a lot of buying coming in here, a lot of people trying to buy the pullback, thinking Mineral Resources is the greatest blue chip mining stock in the history of mankind, and all they should do is buy it. And yet we get beneath that point now, and I feel that it is really acting as supply, because you've got to think that not to everybody in the market, but to many people, this represents their break even. It's where they were buying. All right. And now we're down here. How do they feel? How do you feel once you get into something and it's not going your way? Do you wish that you didn't get in? Do you wish that the price would just bloody well get back up to where you got in so you can get out, right? And never trade that thing again. And this is why previous points of demand tend to act as points of supply. Because you've got this thing in the market. It's pretty powerful. I don't know if you've ever felt it. It's called ex post regret. Have you ever felt ex post regret? Ex post means after the fact, right? You know what regret means. Have you ever felt ex post regret when it comes to your investments? And that's why previous points of demand tend to act as previous future points of supply. And that's why previous points of supply tend to act as future points of demand. I can see ex post regret. I can see supply all over this. And I really do feel that there's no reason to be in it anymore. And I'm just going to draw another minus 1/3 on this, so that next time we come back and look at my scratching, so we can see what has occurred from that. So if we were to call this a buy out of 10, I'd go 0 out of 10. If we were to go hold, I'd go 0 out of 10. And if we go sell, I'd go 10 out of 10 on this one, based upon what I can see. And I totally admit that maybe lithium prices are going to rally and go up and make record highs from here, and everybody will be driving a lithium ion car in 5 minutes. And this is the absolute low, and I should have been telling you to buy it, but that's not what I could see on the screen. It's curious. It's got my interest now. I'm going to go here, and I'm going to type it in. I know it's a widely held. It's very popular. A lot of talking heads out there will tell you that it's a good quality company, great for long term, and yet the chart is telling you something else, and we're not getting it obviously because we've not put our full stop in there. Shows you how computers work or don't work if you don't give them what they want. So let us say we've got 15 brokers here, so plenty of coverage, not like MMI. And there you go, brokers are very positive on this one. Look at that, 16, 17% upside. And I'll tell you maybe why that's the case in a second. Two strong buys. I mean, two brokers banging the table. You've got to buy this one. 7 buy. 5 holds and only 1, like me, saying sell. And yet, the price is going down. How is that possible? Ladies and gentlemen, do brokers always do what they tell us to do? I reckon somebody's doing something else. Let's go to the EPS line. Bottom left, top right, not really. A little bit of a dip here. Don't know why. Maybe lithium prices were subdued, I think, before COVID from memory. And then obviously they took off. Iron ore prices took off. That helps. And then we go from $1 in earnings a few years later to $5 this year, $8 next year, and then pulling back a little bit after that, so that our compound annual growth rate is actually still reasonably good, but I think it is being skewed by that 72%. But let's take it at face value and say that it's better than market growth, to be fair. So we could happily pay up to 15 for it. Market hasn't really paid, the market's not predicting 15 in the future, but certainly you could go higher here. I could go bottom of that 5-year range. I could go even higher for that growth. I could easily go to market. So if we go mid, that goes to 15, and it starts to make mineral resources look cheap even based upon my spreadsheet. How about that? I wouldn't say my spreadsheet is all that at odds with the brokers, okay? Because I might even tweak it a little bit for the fact that this is a bit lumpy through here, okay? And we've got 2 out of 3 years on the downside. So you might even go, well, it's a commodity stock. And given what I can see out there, I might even go moderate risk just on this, okay? Which I think is pretty sensible. And then low and behold, look at that. Again, I don't try and engineer these things. I hope you agree that everything I've said to you makes sense and to why I've picked these settings. That's the market growth. That's better than market growth. So I think that's a good deal. It's fairly reasonable in terms of the 5-year range. It's not reasonable in terms of the future, but I think an appropriate, because maybe the future is not always the best way to price it. And you can go, I've got other options here. I don't think you can see them, but dynamic will give you everything. Dynamic gives you all the PEs and finds the median. And you can see that's getting closer to what I actually typed in, isn't it? Historical will change it completely. And then you've got the future. But the dynamic gives you that balance between the past and the future. Maybe that's where we leave it, isn't it? Maybe that's, I think of all the settings I've selected, that's the most appropriate one. So mineral resources actually looks reasonably cheap based upon the valuation, but it is a straight up sell for me. And I'm not going to change this. So this doesn't change for me. And again, this is the beauty of these sessions. So hopefully you enjoy coming here and spending time with me. I enjoy doing them. And you get just to see a different view of the world, maybe from another analyst or another investor that you might listen to. Hopefully everything I say makes sense. I guess just with the valuation, just for 1 second, I'll just count to 30 and I'll be done on this comment. But you can see the assumptions that go into this. And I think they're all very sensible assumptions. I can certainly make a case for everything I assumed in every setting I put in my spreadsheet. But ladies and gentlemen, that's exactly what your 15 brokers are doing. Goldman Sachs, Citigroup, Deutsche Bank, Macquarie Bank, that publish this analysis to the biggest investors, the superannuation funds, the future funds. I mean, the super of the future, right? They're all getting this research and they are investing tens of millions, hundreds of millions of dollars based upon the research. But at the end of the day, ladies and gentlemen, they're just cells in a spreadsheet. Macquarie's got a dirty, great big spreadsheet. Yeah, it might be a little bit more sophisticated than mine. It's probably not as good as mine, let me tell you. But they're just making assumptions. That's fundamental analysis, everyone. And if you really like a stock, I mean, if I really liked mineral resources, I could have tweaked just a few cells and made that valuation look astronomically good, right? And if I hated it, I could have tweaked a few cells and made it look bad. And I'm just telling you, just be careful if you're listening to a talking head that is talking about fundamental outlook and company valuations, okay? Because it is all guesswork. It's all guesswork. And they have the nerve, to tell me that my technical analysis is guesswork. But everybody's entitled to their opinion. And that's the beauty of the market, isn't it? everybody gets a go. You make your decision and you make your call. You put your money where your mouth is. Hopefully you've been putting your money on this one. So it looks great. I don't have any scratchings here. I know we've covered it. Sometimes I do have to delete my scratchings if I want to put it on it in a tweet or something. But it looks very, very good. Do we sell it? I mean, it's hit $5. $5 bid round number. I'm going to say no. $5 is not a big issue, and hopefully I've tuned your eye to spot this right here. See that? We've already hit $5. We've already had to deal with $5, and I think the market's not surprised by 5 anymore. That's $4.97, ladies and gentlemen. You're right. I rest my case. Round numbers are important, and this is why I'll tell you that. You don't even have to wait for the candle to get there at a big round number like 5. Just put your order in the system. Now, much like we said before, well, we're not going to put our stop loss right on the trough under that trough low there's 410. We're going to put our stop loss at 410 because there are funds out there hunting these levels. For similar logic, we're not going to put our exit. So let's say we wanted to go minus 1/3 at $5. Okay. We're not going to put the order at $5. Do not put your take profit order at a round number. Not right on it, all right? So because everyone is obviously going to be thinking the same thing, right? So you can use that 0.5% rule again, okay? And just go 0.5%, not above. That'd be silly because you're going above the barrier. $5 is the barrier. So come down 0.5%. 0.5% $5 is 2.5 cents. We can't do 2.5 cents on a $5 stock. So let's round it down to 3 cents. And lo and behold, I'm not trying to be smarty pants here, but $4.97 would have been, where you would have set your order to get out, trying to obtain your $5. You're not going for 5, but we've done it. So 5's taken care of, and now we're hitting 5 with some big white candles. You can see how the next time we hit 5, it's not an issue. See, this time we hit 5, we've got a shadow. This time we hit 5, big white candle. Not a problem anymore. Buy, hold, sell. I think I'm still a hold here. This candle's not great. Today's candle's not great. But within the context of the last 3 candles in total, if we have to blend them together, it's still an almighty great big white candle with only a very small upper shadow. So I'm okay on a hold. Would I buy it here? No, I can't buy it here because we're a long way away from the light green zone. That light green zone needs to catch up. We need to throw in the right candles. You know what the right candles are. I talked about them at the start, the demand side buddies. So happy holder here. And remember I wrote the mineral resources I did buy. Buy, look, it's not terrible, but I'm going to go 3 out of 10 on a buy. Hold, 10 out of 10. There's no reason. I can't see a reason to sell it, so I have to say 10 out of 10 on a hold. Sell. Well, that's easy. That's 0 out of 10 here for a sell. Okay, and it's just a matter of waiting. I mean, do your analysis. Hopefully, I've taught you a thing or two. Do your analysis, and when you get to the end of a chart, of analyzing a chart, write it down somewhere. Buy 3 out of 10, hold 10 out of 10, and it's going to tell you what you need to do. And it's only until buy gets to, I'm going to suggest to you 8 or 9 out of 10, maybe we get 10 out of 10, that you've got to think about buying something. Until then, if it's mainly a hold or it's a sell, you're not buying it. But also, if it's a sell, if you've got it and you come up with 10 out of 10 for a sell, why are you still holding it? That's the other thing. I'm going to keep moving on this one. MAF, you have to go down 2 there, which is great. Do we want to take the turnaround trade on MFF, the fund manager? This one, so MAF, which is from Doug. This one's from Doug, and I'm sorry if I missed yours, Daniel. No, I did Daniel's DMT. Okay, so MAF looks promising, says Doug. Look, it doesn't look awful. I'm not going to say it's promising just yet, but I agree, it doesn't look awful anymore. There's a bit of stuff that needs to happen. Okay, so obviously the price action. Well, the first thing is obviously the trend. That's lousy, but I think you know that. I'd only be stating the obvious to you learned people. Let us go here because you know that stuff already, right? Okay, so there's our price action. Obviously, this is good, and I can take a downtrend, long-term downtrend, if it looks like the long-term downtrend is changing and the short-term trend is up. This is where it falls down. Is the long-term downtrend changing? And I'm not sure it is yet, and that's the only problem. It's still pretty nasty, right? And again, if you say, well, maybe I could fudge it a bit if the long-term downtrend hasn't had a good history of impeding upward price action. What do you reckon? Has it had a good history of impeding even here, of impeding upward price action? I reckon it has. So let us just show this a little bit, show that downtrend a bit of respect, and say whilst the short-term trend is up, actually the price action looks very good. I think the candles are quite reasonable. I'm seeing lots of white candles, lots of white bodies and lower shadows in there, but we are going to see some supply in here. I don't think any chart we look at is a waste of time, honestly. I think there's great instructional value in anything we look at here today. There's your point of supply as well. We're getting pretty close. So we've got $5. You know, not that it's a major round number here that the market's going to be too fussed about. I mean, it's been well higher than $5 in the past. It's not like we're hitting $5 for the first time, but it's going to be a profit-taking area for some, because if you got in at $3.85, you know, round number, you're going to think, oh, well, I've made some money on this. I'm such a clever. down here. Let me just point to here, because down here, no doubt at all in my mind, we have some clever little value investors who bought in and because it was too cheap. And they got it right this time. Too cheap. There you go. So we do have some very clever little value investors who got in here, despite the trend looking bloody awful and me telling you to sell it. And, you know, they're going to want to take some profits there and pay for some of their other value investing losses. I'm not going to look at the fundamentals for that, Doug, because I don't think we need to at this stage. John's got CSL. Always interesting to look at CSL. It's losing a bit of momentum up there, isn't it? I mean, we had some good price action through here. And I'll draw that. And you can see where it ends through there. There's actually, well, that actually probably should be there, but let's just go with it. It's not going to change much. And you can see we're just floundering here a little bit, aren't we? That I don't like this this candle here. That bothers me, and this candle here bothers me as well. Today's really important. It needs to keep going. It needs to, you know, this little rally it's got going today with the lower shadow, it needs to hold. Otherwise, between here's obviously a point of supply, and that's clear as day. We've got a point of supply there, and these supply buddies. Okay, it looks like building supply to me, so that's concerning. Today is so important. You can say I just updated, it got a little bit better. So as long as we close, you know, near the highs of the session today, I think it's fine. But what it does give us, I think, is a pretty clear-cut area where, you know, you'd have to agree that it's worth exiting a few. And I said clear-cut, now I'm regretting I said that, because if I look at this, because you know how we do things, right? That's your minus, typically would be your sort of minus 1/3 in there. But then you've got, if you look down from there, there's such an obvious point of demand through here, right? That you might as well, if you're going to be in it, you might as well be sure that it's turned the corner. So I mean, so let's just for so next time we look at it, I can remind myself that I did cross that out. And what I would suggest is the more appropriate. I think that's the way to put it. The more appropriate exit is through here. Okay, I think that's where you're trying to grab you. There you go. Trying to grab you and push you over here. Okay, and make that a little bit longer because we don't know where that's going to break. I think it's pretty sensible. Don't think you need anything more there, do you, John? LIN, which is amazing, Stairway to Heaven. I've been tweeting about this one. It's been my feature chart a few times. I reckon it might have been my feature chart on this day here because that's where it just looks magic. A little bit of supply there, but again, what I mean was there was some supply through here. But we had tested it here and we are hitting it with a beautiful white candle. I can't see anything so sinister in there because we're nice and close to that short-term trend zone, which is doing that. I mean, this is, to be fair, this is one of the textbook, isn't it? This is one of those classic trades that we talk about here, where at that point, it is compulsory, if you see it, to go plus 1/3 there. And now you're in it, you're going to watch it pretty closely after you're in it. And that's a good thing because you're going, well, where's my next entry point? And I reckon it's here. We're still pretty close to the green zone there. And then I really think even here, we're not so far away that we're prohibited from adding in. And then this would be only a question mark here, just distance from the light green zone as to whether we went again here. And I'm just going to put a question mark on that because that might be a personal preference thing. And then I would say here we're definitely too far away. So for me, as good as that one was, I would well, let's just put a cross through it. So next time we come back, and I know that I didn't put it in, but I just think that's too far away. Where are we today? I think the person that asked about this, which is Tanya, I think Tanya's got it. I don't think Tanya's asking me whether she should buy. That's an assumption. I think because I do think it's too far away from the light green zone, and I think that candle today creates some issues. There is some supply in the market. It's not strong enough yet. There's not enough excess of supply to warrant taking any drastic action if you had acted upon this in the past. So I think it's a hold. If we did the buy, hold, sell thing, the buy would come in at 3 out of 10. The hold is probably close to 10 out of 10, and the sell is 0 out of 10. What could make it worse, Tony? You know what to do, Tony. You've been in these sessions many times. Watch for those black candles. Watch for the upper shadows, and then you might need to manage an exit, knock out a third. But apart from that, just a happy holder here. I'm curious now. We don't. Because of that MMI was a total fluke. Let's see if we get something on this one. And I'm not expecting to know. We go zeroed out there, so no broker coverage on Lindian Resources. How are we going for time? Not too bad. Okay, let us keep going to Colin. Colin's got Kogan. Well, I saw this, and I saw this. The candle is what got me interested in this one. And Colin, maybe you just went out and bought it just on that candle because you know how much I love those big white candles. Would I have? I didn't, by the way. But putting myself in your shoes, maybe there's just too much of a supply zone here just to keep us out a little bit, and then one in here. I think it's one we're going to want to buy at some stage, but I've thought that many times, Colin, haven't you? Like here as well, and even here. And you've been very disappointed by this company. I think the points of demand are very gently rising. I think we are working through supply, and if there's enough volume, then in that supply, then potentially we are finally getting closer to the end of it. And maybe Kogan spent enough time and done enough to finally break free of that supply, where for any fresh demand that's coming into the market has actually even finally has a chance to positively impact the price action. Look, I'm a holder here, Colin. I think you can tell from the caution in my voice that we're not quite at a buy yet, but it's certainly one I would like to keep an eye on. And you know what I like to see. I want to see, if we test that supply, how we respond to it. So some nice price action still, the right candles. We may well could add some risk down the track. But a happy holder, I think, for now. If you're in it, there's no reason to say, Kogan's finally gone back up. It's time to get out. I just don't think that's the case. Hi, Perry. Hello, King. After a look at SGF today, SG Fleet Group, the only thing, King, I hope you've spotted it straight away, is the large number of black candles. Look at this. It's quite frightening, isn't it? Even when it's going up. Well, it goes up with a few whites and then just this cluster of blacks. Let me just see if it's ever had a history of white candles. So it has. I mean, it's not incapable of putting in white candles on accumulation phases, but I just don't think we're there. And, there's a bunch of stuff that's going to knock it out. Obviously, long-term trend still impeding price. Short-term trend is not up yet. Price action, well, we actually don't even have any upward price action. It's still low. It's still lower troughs. We've got one higher peak. So we can't say high peaks and high troughs, let alone good price action. Maybe there's some build through here, but it's still very, very tenuous. What would make it better? I need to see white candles come in. I think it could take a while before we saw enough white candles to get me excited, because we need to get out of this black candle phase and then testing into points of supply. If I had it, could I hold it? I could hold it on the basis that maybe there's some white candles coming in that low there. I'd have a stop loss set, sort of 189-ish, and holding on that basis. But it's hard to get to a hold, because I reckon there are many, many other better charts out there that we've seen today than this one. So I'm going to go just pass on that one. Sorry, King. We've looked at LIN, Perry. So let us look at LAU, which is the other amazing one. We can see we had a minus one third, and this is where You know, sometimes you go, oh, well, you shouldn't have got out a third just for the sake of it being $1. And I say, no, it's fine, because if it is that good, there are going to be other 1/3 that you can see, other 1/3 we've put on this screen here in the scratchings. Yesterday's candle is amazing. Would it be a plus 1/3? I think it's very close. It's just a bit of a ways away. You know, it's gone a long distance from that light green zone, and therefore chances of mean reversion just increase a bit. Today's candle's not great. Is it enough to manage your exit? It's getting pretty close. You know, I would say if it closes near the low of yesterday's candle, around 130, then I do think you do have a minus 1/3. So let me just be very clear on this. So we go close less than or equal to 130. Just so when we come back to it, I know what I said. Then we would be matching our exit on that one. So, but that black candle's not bad enough yet. It's not, showing us that there's enough supply manifesting itself in the market to panic just yet. Other than that, I would say if we closed beneath this little point of demand here, I think that would also give you cause to minus 1/3 through there. You know, it's had a great run, so we're being sensible about aggressively managing our risk if things don't go right. Otherwise, this is still I'm going to go buy. Look, I don't think it's not that far away. It's probably the same as the other one. 3 out of 10 holds. We got 9 out of 10 just because of that black candle that's there, and sell is it's still 0 out of 10. But as the price action changes, you'll see those numbers will change as well. Lindsay Australia, we probably worth looking at Lindsay because we're going to get coverage on this. So Lindsay Australia is the transport company, and because the oil price is very weak, that does help them. LAU. For brokers, not huge coverage, but there's enough in there, and even after its significant appreciation, there's still upside here according to these brokers. 1 strong buy, that's very impressive. 3 buys, no holds, no sells. I should say the fact there's no holds or sells is impressive. Bottom left, top right on the earnings. No, we've had a bit of a dip through COVID, but being a transport company, you could understand why nothing was moving during COVID. That makes a lot of sense. And then we're bottom left, top right from there. I mean, the growth looks amazing. 14% is fantastic. Could have paid 22 times earnings. I'm going to take that back to my default. Could I pay 22 times earnings for a 14% growth rate? Yeah, I could. I don't think that's unreasonable. How does that look 22 times versus the 5-year historical average? It was definitely at the bottom end of the range. And the reason why I look at that is it tells us that investors have paid way more. They've had much higher valuations in this company in the past. Isn't it reasonable looking forward? No, the PE is going to get so much better. I think you could use a higher number. That's getting a bit mixed up here. No, I don't think we need to use a higher number. Do we need to use a lower number? Maybe, given that. Let's go. Well, so you can see I'm on dynamic, so that's looking at everything. Well, there you go. Great example of how this can change. One cell into spreadsheet. That's looking at all historical and future, current and future. And then if we just go future, there we go. You can see the future. It says, well, 22 is less relevant. You probably shouldn't use that. The brokers are working off 10. We've still got 12% upside, but I actually think 10's too low. I think 10's way too low for that growth. I think this is really cheap here. And I could even just go, say, a 15 market, and it's crazy. It looks crazy cheap here on my spreadsheet, Lindsay Australia. Okay, let us head over here, and maybe that's why it's going up so much, because it didn't just look crazy cheap on my spreadsheet today. It would have looked like that for at least a few weeks. Let us keep moving here. Telix from Barry, TLX. Look at this. Plus 1/3 was the last thing we said on this, but hopefully you can see there are other places to buy since we last looked at it around here, I'm guessing. Well, last time I said 100% hold. Maybe we said 1/3 here, and last time we looked at it, we said 100% hold. This is still 100% hold. So this is actually very easy. You can do this one very quickly. Look at this, copy paste. There you go, 100% hold. Isn't that interesting? It's just mind-boggling sometimes, isn't it? My methodology, because anybody else, any other talking head's going to say, "Oh, it's gone up a lot. You better take some profits." No, 100% hold. There's no reason to get out of that one. Hey, that not to say tomorrow might be that big black candle that tells you to get out, but today. happy days. That one's for Barry. It's also for Hanelli. Hanelli's tempted to get in here. Hanelli, I don't hate the idea. I just think it's a long, long way away from my light green zone. That's all. If you're in it, you're happy holding it. Because you're so far up, you don't mind giving back a bit of profit. But if you're not in it, you're not giving back profit. Now you're starting to make a loss if it mean reverts. I can't tell you not to, but I could just say maybe there's one that's a bit closer. I mean, they're just pictures, aren't they? They're just got to find the picture where you've got the trend zones, double green trends, white candles, nice price action, and you're near the light green zone. That picture will be out there. And maybe that's the one we go today instead of, being tempted to buy this one up here from Mirage, looking at 4DX. Oh, what a monster. It looks amazing. And again, it shows everybody the importance of this, what's this miracle down here? I covered this on Twitter for somebody. Somebody asked me about it on Twitter, and I said, look, this is impressive. You can almost just buy it just on the basis of that big white candle and see how you go. Because all you're doing down here is you're saying, look, I want to have some risk. I love big white candles. Big white candles tell me there is overwhelming demand and absolutely no supply. Why is that the case? Is it because it's good or it's bad? Is it all demand and no supply because it's good or it's bad? It's good, right? And then you just got to watch these ones. And then look, even this one, if you just, even that, plus it's not a sell. This is not a take profit, this one. This is a buy more. And then this is a buy even more down here. And actually this one here is actually pretty impressive too, that white candle. What do we do here? Oh, I don't know. This candle's still live. We've got a bit of an upper shadow. And then this little shadow tells me we're finding at $1. Haha. How about that? Look at this. Well, the first time we hit $1, it pulled back. Second time, it's more confident to get through. I think we're finding a bit of supply in here. Watch out to manage your risk on this one. You're pretty close, I think, to taking a little bit of profit here and holding some, obviously. But yeah, this is a great case study. Look at the volume. Just turn the volume up the stereo. Everybody knows about this party now. But I just think maybe that shadow and this shadow here, we're probably closer to having an exit rather than entering for the first time. But hopefully you're on it, Raj, and hopefully you're doing really well. From Hanelli's got Healius HLS. We're getting pretty close to time here, everybody. So stop typing in new ones, and I should be able to get to the bottom of our list. Hanelli's sweating it out. Holding, but nail biting. Oh, I can see why it's nail biting, Hanelli. Did we say this was a super aggressive buy equals turnaround play, sustaining evidence? What? I can't believe I said super aggressive buy on these. I can't believe I did. It must have been a different Carl. I can't see. Maybe I was saying that if you did, it would be super aggressive. But I'm pretty consistent, right? I can't see where the buy is. Lots of white candles, nice price action, but I think we want to see how we go here. I mean, it's still respecting this long-term downtrend. So, yeah, this is an odd one. It's beneath here, Hanelli. Hanelli's saying, she's fretting about it. Don't fret. Don't fret about anything in the market. Don't do it. Why are you fretting? There's no fret. There's just what you have to do. And you're going to fret if you don't know what to do. Of course you are. It's the scariest thing in life is I don't know what to do now. I mean, you can have a scary situation and know exactly what you need to do, and it's not scary. You can have a situation that's not that scary and you don't know what to do, and it's really scary. So, Hanelli, don't fret. Don't stress. Just do what the chart tells you to do. And certainly we're reducing risk through there. And I can't see a reason to be long it, first off, but if it gets below there, it's looking pretty bad again. Let us keep going. Select Harvest is the next one. This is actually starting to look very good. This one came up my scan yesterday. So I'm a plus 1/3 here. I don't have time every day, unfortunately, to do my Twitter lists. I wish I did, but that came up. So plus 1/3. I nearly said compulsory. Oh God. In my mind, I was talking to myself there. Compulsory entry. Okay. It's not for you because you have to do what you have to do, right? This is general advice only. And this is why is that not working? Oh, I can't even show it to you. I was going to show you the shark, but you know what I'm talking about, right? So when my, can't do it, I have to set up in OBS, it's not going to work. I'm all over the place. Okay, so when my brain says, hey, Carl, compulsory entry, just add a third, right? It's because it's just a third. It's just a toe in the water. And if it gets chopped off, who cares? And if you lose money, who cares? You have to get to that stage of who cares. You're going to do so many trades between now and the day you stop trading. Who cares about this trade? If this is trade 46, are you really going to fret about trade 46? If you're going to do 1,000 trades between now and the day you stop trading, and this is trade 46 of those 1,000, who cares? Just add a third and stop stressing about life. Enough analysis on that. We don't have time to do the fundamentals, maybe another time. I want to get to the bottom of this list before we adjourn. We've done MMI, and for that one's for Peter. If you didn't catch it, peeps, you turned in late, go catch the recording. I'll put it up later on YouTube. WBT, always fascinating. All right, if this candle closes where it is roughly now or better, yesterday's your plus 1/3, ladies and gentlemen. Yesterday, hopefully you can see that, but today's very good also. It's a plus 1/3 on Weebit. How about that? I wish we were here yesterday because we're starting to get a bit of a ways away, but let's go that close. It has to close near the high. So the current is 641. I know it's a live price. It's a moving target. So 641 or better. Very small upper shadow allowed only, ladies and gentlemen, and then plus 1/3 on that one. Let's get to CSL. We've done. Tim saying he got in late. We did CSL. Tim, I gave you some levels. Check the recording. SHL. Starting to lose a bit of steam, isn't it, Hanelli? So I think we need, we talked about a little bit of a manager exit when it hit there last time. And now I think we're, I think you're ready, Hanelli, if you're following the rules, you should have actually probably done it already because there's a little level through here. And if you're not, that's okay. There's, market always gives you another chance. So let us say on a close beneath that low, we are going minus 1/3. And the most you're going to have there is a third left over, just on the basis that the overall trend is still reasonably strong. But you should be 2/3 out of this one, or certainly beneath that low there. That low is 32.27. So let's say, putting a stop at say 30 to sort of 15-ish for the next third there, Nelly. And Tim saying ignore, he might have found the CSL. William saying thank you, William. Hope you're doing well. It's been a long time. Hopefully we'll get another chance to catch up in the not too distant future. Hey, Carl, any chance you can talk us through picking up? I can't, Steve, another time on that one. Hey, Allkem. We're talking, hey, why don't you, here we go. Why don't you tell ThinkMarkets that you want to do a live workshop with me? I used to do 2-day live workshops, and I think that's probably where we want to go. And I'll do it with a small group, say 20 to 30 people, no more. I can only do it for clients. I can't do it just for anybody that's finding me on the internet, and maybe clients that have done a few trades at least with us. But tell ThinkMarkets, hey, look, if you do this with Carl, I'm going to open an account. I'm going to be your best friend. Then certainly I'd love to do something like that with you in the future, Stephen, because there's only so much I can show you in this. I can assure you there's plenty more I can show you. Let's look at Allkem. Allkem's not terrible, not great. It's still got a little bit of work to do. I can see some supply manifesting itself in here. I can see that high there at 12.45. The next one's 12.44, and then today's high with a upper shadow at 12.47. So we've got some supply in here. It's no surprise we've got some supply in here. So if I extend that across, you can see where it's coming from. It's coming from that point of supply over there. There's enough in it in terms of the other candles previous to this to tell me that there is actually some credible demand in the system. These white candles, these lower shadows. So I can certainly wait, I think, and see if we close above that high there at 12.60, then I could add some risk, but only then. So let us go greater than 12.60 equals plus 1/3, but not until then. Let us finish today with Iluka. It is the last one on the list, and hopefully I did everything you needed me to do today. Very interesting here. I wonder if this is a dividend. If it is a dividend, it's not so bad, but I'd still probably be looking at this low as a lighten anyway, even if it is, because the price action will be changing. If it's not a dividend, it's even worse. That's where I'm going with this. So last time I might have said hold because look at the trend. The trend was fine. You did have some signals though. I think through here we've got some problems, and that gap down there is an issue. That candle, even enough, is probably in itself to go minus 1/3 and maybe even around here. But that's all navel gazing. That's the history. Let's look at the current and the future. And I can say certainly beneath here, I want to manage my risk. And maybe even a little bit more than 1/3 if that was to occur. If today's candle's low is 1089. So if we, because I think you can get out before that. I'm trying to find a way to get out even quicker. You can sort of see where I'm going with this. So if we say close, not kios, close less than, what did I say? 1089 there, 10.89. I'm going to go equals minus 1/3, just on the basis that this candle here blended with what will be not a very nice candle there, okay, telling us that supplies come back in at a lower points of supply building. There's your POS there. You've got a slightly lower POS there, which means that your pod, which I'm going to say is roughly through here, there's your issue. When you close beneath it, you've got a problem, right? This POS here is, these POSes are building, so this is the issue here. And therefore, I'm being very, very strict on this one. So if this candle is bearish, confirms this supply candle here, we're minus 1/3. And then the final third is probably here on the break of that low, which I will tell you in a second is 1073. Okay. All right, that's it. I got to everybody's questions. Thanks for joining me today. Let us head back here. And somebody's really trying to get in touch with me. Say that we're back on Thursday for the macro stuff, indices, commodities, forex and crypto, and then on Friday for the USA shares. And I do get huge turnouts for this today. I can see I did get my 50 people in session in Zoom. And then so few people turn up on Friday. Hey, turn up on Friday. If you're trading Aussie shares, you would love to trade US shares, I can assure you. So head to thinkmarkets.com/webinars to register for that. If you're not a client of ThinkMarkets, you really should be. We are the good guys in the Australian broking scene. Trade anything you need to on cash equities, $8 flat rate trade, Chess and Hin sponsored, and then with your CFDs, indices, commodities, FX, crypto, and all of that commission free. You can trade actually a lot of overseas shares as well. You can trade Aussie shares commission free. Award-winning broker. We keep winning them. We keep getting nominated for them because we have the best platforms and the best customer service, and we are regulated all over the world. You are safe with ThinkMarkets. Head to www.thinkmarkets.com/AU for more details. Apart from that, it has been a pleasure chatting with you today. Hopefully you got lots out of it and you had a good time and learned a bit as well. All the best for your investing till we catch up again. Bye-bye for now. But before you go, actually subscribe, but that goes without saying, and thumb up this. Not that anybody listens to the end of these presentations. Before you go, everything we've talked about today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general information, consider it carefully or seek the help of a financial professional. The rest of the information, that disclaimer is important. You should read it. Or if you have any questions, please contact us via our website and download our product disclosure statement as well. Bye.